Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. On the screen in front of me, I have on the right Anthony Pompliano, who is the CEO of Morgan Creek Digital, and he is a big fan of Bitcoin. And on the left, I have Peter Schiff, who is a huge gold bug. So these two have been going back and forth, whether gold is better or Bitcoin is better. And Anthony Pompliano, the CEO of Morgan Creek Digital, he always uses the argument that Bitcoin has an asymmetric risk. Now you might ask, what is an asymmetric risk? And I'll tell you today. So there are two types of bets or risks. There's asymmetrical risk and then there's symmetrical risk or a symmetrical bet. So an asymmetric bet, trade, or investment is when the potential upside of a position is much greater than its potential downside. So for example, with an asymmetric bet, you can risk $1,000 and in return, there's a chance you can make 10,000, maybe even 11,000, maybe even 20,000. And then on the opposite end, we have a symmetrical bet. So this is where you would risk $1,000 and maybe the most you can make back is 1,000. So you're doubling your money, but it could also be you put in 1,000, maybe you get 50% back, 50,000. So right off the bat, you might assume that a symmetrical bet is safer. That's not necessarily true. You can still invest in something that is a bad investment and also has a symmetrical risk or symmetrical bet. So those investments you for sure don't want to jump into. And then with an asymmetrical bet, you would ask, why isn't everyone doing this? Well, the reason that everyone is not doing this is because it's not as simple as it seems. And we're going to use poker as an example. So when it comes to poker, you can play with a small amount of money and in the end you can come out with a lot. But how much does the average poker player win, maybe in a casino? So let's see, if the question is, this is an article I have from ESPN.com, if the question is what percentage of people who play poker in casinos and or online are winners, then the answer is probably somewhere around 5% or even lower. So this could be considered an asymmetric bet because anything like gambling, you can put in a little money and you could always come out with a lot. But it's not a good bet to make because as you can see, only around maybe 5% of people, even if it was 10%, you're going to lose most of the time. But then once you start knowing about poker and studying up on it, the risk is not as high. Over here we have the percentage of professional poker players. So a good poker winning percentage at the micro stakes game like NL2 and NL5 can be as high as 90%. But once you get to higher stakes like NL25 and NL50, your winning percentage will be much lower at around 60%. Winning high stakes poker players may only book a win little over 50% of the time. Over 50% of the time, I'll take that every day. That's still a high percentage. So when we're looking at asymmetrical bets, you don't just jump in because you know that it's an asymmetrical bet. You still need to understand the field. You need to know what you're doing. Here are some examples of possible asymmetrical bets for the future. So here we have cannabis. Why is this an asymmetric bet? Because we already know that there is a strong market for the cannabis industry. We know people have been using cannabis for many, many years. Also, we know that many countries are currently making cannabis legal and every day the list is growing. So there's a whole untapped market. But the reason it's a risk is because maybe it won't take off. Maybe countries won't jump on the bandwagon and make it legal. Maybe countries that made it legal will reverse their rules and make it illegal again. So you could put in, let's say you invest, for example, keep it small, $100 into the cannabis industry. If the whole thing goes bad, you might lose $100. But if the market goes great, your 100 isn't going to become 150. It's more likely that it could become 200, 300, 400, or 500 just because of the potential. Another place we can see asymmetric risk is Africa. Why Africa? Well, there are some benefits of African investments, as I have in the article in front of me. Number one, the natural resources. Africa has an enormous amount of natural resources ranging from oil and diamonds to gold and uranium. And many of these natural resources remain untapped due to a low human density along with a lack of infrastructure and financing. And then in addition, Africa has a large population. And it's relatively underdeveloped. So again, it's untapped. So there's a lot of upside. If you invest into Africa, you can 10 times, 20 times, or 30 times your return. But again, what is the risk? Here are the risks of Africa. There are governmental problems. Many of these African governments are known for their corruption or lack of policy. Then there's a lack of infrastructure. So while that's part of the reason it is a good investment, you want to build the infrastructure, it might not work. So you might lose all your money. So again, you can invest $1,000 into Africa. If the whole thing goes south, you might lose $1,000. But if it goes well, it's not likely that you're just going to turn your 1,000 into 2,000. Your 1,000 will maybe become 5,000, 6, 7, 8, 9, 10,000, and so on. And Tony Robbins talks a lot about asymmetric risk, and he also talks about symmetrical risk. So in this article I have in front of me from Fortune, they take information from his book, Money Master the Game, and they repeat it over here. He talks about more symmetrical risk, and I guess these ones would be safer. So that would just be having cash, government bonds, certificates of deposit, your home, your pension, guaranteed annuities, life insurance policies, structured notes with 100% principal protection. And again, these are symmetrical because even if you put money into them and they do well, you might double your money. Maybe you'll gain 75% on the money. But just remember, just because these are symmetrical bets doesn't mean that they're good investments or safe. For example, let's say you are using a government bond, but it's not paid back. I guess it's what's the word I'm looking for? It's I'm sorry, I can't think of the word right now. But anyways, just because you buy a home doesn't mean it's always a good investment. It can still lose its value. And then as we scroll down, he talks about asymmetric bets. So that could be equities such as stocks, mutual funds, index funds, high yield bonds, real estate, commodities such as gold, silver, currencies, collectibles, structured notes with partial principal protection. So again, while these are asymmetrical bets, you'd ask, why doesn't everyone just do this? Because in the end of the day, it still doesn't mean it's guaranteed. You need to know about the field. Let's use stocks, for example, when it comes to asymmetric bet. Buying a company such as Apple or Google or Microsoft, it's not an asymmetric bet. The reason being is, although it might be a good investment, you're investing in a good company that makes great products, their market caps are around $1 trillion today. So that means to double your money, their market cap has to go from $1 trillion to $2 trillion, which is kind of crazy to think about. So that means if you put in $100 and you want it to become $200, the market cap for these companies has to go from $1 trillion to $2 trillion, and that's likely not something you'll ever see in your lifetime. But when you invest in a stock that the market cap is maybe worth $1 billion, this is a place where you might have some asymmetric risk. But at the same time, you don't just want to jump in to a random stock. You need to know about it. You need to understand it. So that brings us back to cryptocurrency. This is a market that we already saw in the past had asymmetric risk, and it paid off for many investors. And the market is still small. We're not even at a $1 trillion market cap for the total crypto market. And then Bitcoin's market cap is fluctuating, but it depends what day you're looking at it or what month, but it goes between 200 and maybe 300 billion, so still small. So you can put in money. For example, you could put in $100 into cryptocurrency and you might lose it. You might lose it all. But on the other end, if it does well, your $100 can become $5,000, $10,000. And I know that sounds crazy. You could even, if you're using it with bigger numbers, if you take $1,000, it can become $20,000. But again, you need to know what you're doing. Most of the crypto projects that people are looking at, it's just vaporware. It just has a nice white paper. they're not really doing anything. And then again, it's not just cryptocurrency that has asymmetric risk. There are many things, and it's not hard to find what has asymmetric risk. You could probably just go on Google and search what are some asymmetric risk investments, and they'll come up. But what you have to know, or what you have to understand, is that once you find out what these risks or bets are, you need to really understand that field. You can't just jump in blindly. I hope that you found value in today's video, and I'm wishing everyone luck in finding those asymmetric risks or bets, and I hope that you win those bets. Again, if you did enjoy today's video, please subscribe to the channel. I want to thank you for listening, and I'll see you next time.